Hi, it's Martin from the Accelerator team, and this week I'm with Zach Wardle, who's one of our healthcare team. And Zach, you deal with a lot of dentists, so you're here to talk about life as a dental associate.
Yeah, so I think it's really interesting to sort of go through the different stages of when you're first going through university, and then you do your foundation dental year, and then you go on to actually become an associate. So I think it's important to realise the different steps in the process. And just know what you need to know at each sort of point in time.
Because the three key stages are quite dramatically different, aren't they?
Yeah,
so we'll start, we're at uni, we're doing the 5 years.
Yeah.
There's not a great deal to know about there, tax or accounts wise.
No, so at university, I mean, obviously you're just doing your usual student life. You go through 5 years, and in your 5th year, you have to do a situational judgment test, which then sort of determines whether you get the foundation dental placement that you want. So you'll rank the foundation dental placements in the country, depending on how high you score is dependent on whether you get your first choice, your second choice. So obviously the people who are getting the best marks will end up getting their top choice for the foundation dental.
Stick in. There's the first tip, stick in.
Yeah.
Right, we've done that. We're now on our foundational placement. These are normally employments.
Yeah, so they are employed, and they typically get paid through the NHS. So they used to get paid, the NHS used to pay the dental practices, who then used to pay the foundation dentist, but they've sort of taken that out now. So the foundation dentists are paid direct from HMRC, you know, as an NHS as an employee, and obviously have their pay as you earn, national insurance deducted for them and things like that.
So for people who don't know, because we're talking to people who might not have had a job yet, that's your normal tax and national insurance deductions.
Yeah, just as if it was any other job for anyone else.
And normally when you start a new employment, you just ask, is this your only or main job? If you say yes to your employer, then you'll just normally pay the right tax. There's nothing exciting at this stage.
Yeah, no, there's nothing to delve into really with regards to that.
The only thing they might need to do, and this might not happen much, but you can claim expenses if you've got professional subscriptions or costs relating to the employment. You can let the Inland Revenue know, and they'll normally provide an allowance for that.
Of course, yeah.
So if you're subscribing to a trade mag that is voluntary but it's relevant, you might be able to get a tax deduction for that. It's normally quite simple just to write to the revenue and say, can I have expense for this? Or there's a form P87 you can fill in. Not to get too technical, but yeah. Or when you get an accountant in the next stage, you just say, I've got some costs, what should I have done? And they'll talk you through that. But with fairly immaterial, most people are just going to get paid, and that's pretty much their tax sorted at that point, I think, isn't it? So what happens then, Zach? So they've finished their foundation year, they get into, end of year 6 now, isn't it? Because they've done 5 uni,
pretty much,
year 6. They get to the end of year 6, the summer of year 6, they become normally self-employed. For most people, but there is a point to cover here about the structure, isn't there? So when you're first sort of getting set up as an associate dentist, you can think about the various different structures that you can go down. So you could look at setting up a limited company, or just your bog standard sole trader as a self-employed individual. When you're looking at becoming a company, I think you need to sort of think about all the factors, not just one thing. Obviously there's potential tax savings there, but you need to have a think about, are you doing NHS work, are you doing private work, are you doing a bit of a mix, which one's sort of higher? The dominant, so obviously with the NHS, there's various tax implications regarding the superannuation. So, if you're if you set up as a limited company, you can't put the NHS income through it because it sort of voids the superannuation, because you can't be enrolled in the scheme whilst it's. So this is the pension again. Most people put this is the pension scheme. So you're foregoing one of the quite a big advantage here, or a big part of your earning career, your career earnings. So
typically we'll tend to see associates set up a limited company when they are either all private, or they've got, the private income is sort of pushing them past that £100,000.
Big enough to warrant
so it pushes them right over that. So it allows them to stay below the £100,000 threshold, so they don't lose their personal allowance and things like that. So it all just comes down to everyone's individual situation. you might hear sort of your mate down the pub say, I've set up a limited company, but it's all about thinking what's going to happen with this money in the future. Do you need this money right now? Yeah. You know, if you're going to be spending the money, obviously when you're young and you're just starting as a dentist, you're going to be maybe wanting to buy a house, things like that.
You just need the income.
Yeah, you just need the income. So
it's a classic one of anyone who's ever had a mother or a father.
Yeah.
You go, if your mate jumped off a bridge, would you do it?
Yeah, of course, yeah.
Apart from this is more important than that,
yeah.
like, because you can make a fundamentally drastic mistake here if you get this wrong.
Yeah.
The majority of people though are probably doing a bit of NHS or mostly NHS work.
Yeah.
They probably want more money.
Mm-hmm.
The company tax savings only really come in if you can leave money in the company. So most people probably think, I've just finished a lot of years of studying, I need money because I want to buy a house and I need to pay me debt off. And I'm doing NHS. So the overwhelming majority become self-employed, don't they?
Yeah, so they'll just transition into obviously being a sole trader. You'll have to register with HMRC, and I mean you sort of just go about your life, you know, you work your job. The only sort of thing that you need to worry about is your employer's not taking the tax off you. Obviously there's other various things that you need to be concerned about, sort of like keeping your records up to date and things like that.
So in the main thing there is, I mean the biggest one is the tax. No one is paying your tax for you. You're paying your tax. So you'll probably go from a wage where you got a net pay and that was all, you could just almost, that was the end of it, to now getting probably significantly more money, or possibly significantly more money. But you've got to remember that a lot of that is going to disappear.
I think it could probably be quite exciting seeing all this money coming in and thinking, I've got all this money to spend. Cause especially when you're used to the tax being taken off you. But it's important to obviously remember that you do still have the tax to pay. I mean, we tend to sort of recommend saving about 1/3 of your income every month to sort of cover the likes of your income tax and your national insurance as well. And obviously tax rates fluctuate depending on how much you're earning, but because of the lower rate and the personal allowance, it sort of evens itself out at about 1/3.
Because you'll pay not much tax on some of it and quite a lot on the other. So if the normally about covers it. We could get into the timing on that, but it's actually pretty complex, and it would be an interesting one to try and do without diagrams and charts. The simplest way is you put your 1/3 away, and then when your tax comes up, you've got it. It's the simply like. If you want a projection on that when you roll in, Zach will happily explain how it's going to work in detail based on your circumstances, but for now, that 1/3 will cover it when it comes. You can almost just put the 1/3 away and forget it.
Pretty much,
So we've mentioned the 1/3, we've mentioned tax, but we haven't talked about the things that can reduce the amount of tax. So you mentioned about keeping records. How does this look then? What does the income look like? What do you get to support your income? Because you don't get a pay slip anymore, do you?
So the associates will get an associate schedule from the practice that they're working at. You know, whether that's one of the big corporates or if it's just a local, you know, family-run practice. I mean, I suppose you could just class it as the dentist version of a pay slip. It'll go through maybe as if you've got your NHS income, private income. It'll have your deductions for, you know, your payments to principal, because obviously the practice will take a certain percentage of your income, sort of like a rent-a-chair basis. You've got your lab fees, deductions, any levies that are taken off you for it's sort of like the dentist's union essentially. And then you've got the likes of your superannuation, which is your pension contributions, and maybe therapist fees and things like that, lab fees, stuff like that. So.
And the net amount on there is, on the face of it, your taxable profit if you did nothing else. But there are expenses you can claim.
Yes, there are.
What take us through some of the common ones then, because most dentists probably don't spend a significant proportion, but also you should put your expenses in.
So
because otherwise you're just losing tax.
So usually it's sort of any costs that relate to your business itself. I mean, a lot of the dentists, I feel like, don't tend to see it as a business, but it is in the grand scheme of things.
A lot probably think of it as a job.
But
again, you're not working for someone now, you're working for yourself.
So I mean, typical expenses tend to include the likes of professional subscriptions, like the indemnity, maybe his GDC, ICO, stuff like that. Buying some scrubs, obviously you need your protective clothing for when you're working as a dentist. Staff training, you know, if they're going to training courses, CPD, keeping up to date.
To drive to Leeds for a course, including the travel, the cost of the course.
Maybe there's any hotel that you have to stay overnight for the course.
Probably not in Bali though.
No, probably not in Bali.
Yeah, it's got to be an allowable deduction.
So I mean, with regards to business mileage as well, I mean, it's very rare that you tend to see it relate to an associate, because if you're commuting to and from a normal place of work, you're not allowed to claim that business mileage. Whereas if you're working as a locum, you know, and you're travelling to different practices wherever,
new practice every 4-6 weeks. Then,
that's not commuting to a normal place of work, so you can't have the business mileage for that. So I'd say if you're not sort of sticking in one place and you're working around these different practices, keep a track of what mileage you're doing. Obviously, it's allowable at 45 pence per mile up to 10,000 miles, and then 25%.
So the simplification there is keep a note of your miles. Your accountant don't worry about it.
We'll sort it out.
We try to keep it simple. So I mean, there's probably not a great deal of that. I mean, is it worth talking about pensions at all here? Because if you've got your NHS superannuation, your pension, you mentioned earlier that before we started that, as people get older, they kind of think, well, I wouldn't mind getting out a bit earlier. They then start looking at external pensions.
Yeah, so a lot of the associates who have sort of, you know, they've had quite a lot of time working as an associate, they've got their experience, they've sort of got their personal sort of structure down, you know, like I say, having the house, family, things like that, and they might have a bit of spare cash. So what they tend to do is they'll set up a private pension fund, which they'll contribute into. And what that does is it doesn't necessarily deduct their sort of taxable income, but it'll extend their basic rate band. So they're paying more at 20% than they would be at
20% than 40%.
Rather than 40%.
So you save a bit of tax. Pensions are a regulated thing. We have got a financial planning team who would discuss whether it's a good idea. We wanted to mention it because, again, your mate in the pub will go, I pay no tax because I'm paying to a pension. It's never as simple as it sounds. It's always worth getting some proper advice. What about so use of home then, Zach? You know, because these people might have a space where they do their work, but probably do other stuff.
Yeah, so I mean, there's a few of the associates tend to, you know, they'll have like an admin day at home, something like that. So if you keep a record of how many hours you're sort of spending each week or each month at home, usually it tends to be about 6 hours a week to be able to claim the minimum allowance for that. So that'll be £10 a month, so it's £120 over the whole year, which will decrease your profit.
Again, it's not massive.
It's not massive,
but at 40%, that's 50 quid. You may as well have that 50 quid.
So every little helps, I guess.
I think that's a trademark.
Yeah.
You can't use it. Other supermarkets are available.
They've also got an allowance for sort of laundering their scrubs as well, so that's £125 a year, which again you can take off your profit. So that's obviously just, I mean, you're going to be washing your scrubs at home, aren't you?
Hopefully you're washing your scrubs.
You know. I don't think many of them would not. Anyway, so there's various different costs that you can obviously be aware of. I mean, if they were to buy equipment as well, you know, you can decrease your profit with the equipment that you buy, your taxable profit at least anyway. So that's the likes of...
How many people, Zach, you know, the likes of...
I was going to say the likes of sort of like dental loops, laptops, iPads, anything that sort of helps them with their work. That
you're actively using in your job.
That you're actively using.
Not like £3,000 gaming PCs.
No, definitely not, no.
How many people, Zach, when you're speaking to them, kind of go, well, I haven't got any expenses, and then after you've gone through it, they go, well, actually, there was a bit.
Yeah.
Like how many people are in that naive, no expense mode?
So I think because of the timings of when the accounts are prepared and how long ago it was, because they think of it as their job and it's just their day-to-day life, I feel like they tend to just forget about what expenses they've had. I don't think it's necessarily you know, they don't know about them. I think it's just that they've probably forgot. So when I'm going through, you know, if I'm going through their bank and I'm reconciling their bank and I'll pick out these little expenses, and it comes to the meeting and you say, oh, you've had these expenses here.
Because you would recognise a lot of them and you go, what was that?
Yeah, I mean, you see them day in and day out and you know what you're looking for. So it's it's very rare that anything sort of slips through the net, but I'll tend to ask them, you know, if you are aware of any expenses, let me know about them just to make sure that we get them in there.
Meanwhile, let's cover the basics.
Yeah.
And we'll make sure, And I suppose that's one of the advantages of using someone who, this isn't necessarily a plug, but it kind of is, someone who understands what the business is.
Yeah. Just knowing what you're looking for, and just it's certain words that you'll see on a bank statement. Obviously, bank statements will tend to abbreviate different companies and stuff like that. So if you've got a sort of idea of what you're looking for, you can tend to pick them out fairly easily. Obviously, like I say, when you're doing them day in and day out and you're working with dentists, you know them a lot more. Whereas, you know, if you went to someone who doesn't really deal with dentists, you might probably miss it.
They'll miss a bunch of that. There is a tip on bank statements as well and bank accounts. Yeah,
so I mean, like I say, obviously a lot of them think it's just a regular job, so they sort of go about their day-to-day personal life. What I would recommend is someone starting as an associate, I would probably say set up your own business account, get paid into that account, have your expenses going out of that account, and it just makes everything a lot more simple. I feel like for them as well, it's probably a bit easier to keep a bit of a track of how much money they're making as well, I guess.
Because just to go through this then, if you have two bank accounts, the practice will drop the money in, you'll save a third somewhere. You'll buy your equipment using that, you'll pay for your training using that, your scrubs using that. All of those costs will go, if you pay for the hotel in Leeds we talked about, that comes out of there. If if that's $4,000, you want $3,500 to pay your bills, transfer the 3.5 and then that's where all your normal personal expenses come from. So it's like a proper separation, which makes it much more easy to then spot the bills. You go, I used that card for a business expense. Makes it easier for everyone to spot, less likely to get missed. It just simplifies a lot of things, doesn't it?
Absolutely. But it also, I mean, if you accidentally used your personal card, there's nothing stopping you from bringing that expense in as well.
You can still claim the expense, but let's try and make it easy for everyone and just keep it all in one place. I suppose the fourth part of what dentists do then, Zach, is at some point you may go, I wouldn't mind buying a practice. So, you've done your associate. Is there anything they really need to think about on that next stage?
So I think
it's optional and everyone does it. But
I mean, I think the most important thing that they probably need to think about is financing the purchase of a practice. There are various sort of things within an NHS contract that prevent sort of the sale of the contract. So when you have a practice that's set up as a limited company, for example, it's easier to sort of sell that practice because the company owns a contract, whereas when it's in someone's personal name,
the contract comes with it.
Whereas when it's in someone's personal name, you have to get a specialist solicitor involved to have a look at how the contract works, how the structure is going to work to be able to sell this practice. So when you are looking at buying a practice, like I say, if it's in a company already, you should be good to go because the contract's owned by the company. It's very rare that you would see a wholly private practice, but it's not impossible. I mean, the way that things are going now with the NHS contract itself, and a lot of dentists aren't happy with the NHS contract. The government's not exactly doing the most to help the NHS contract. I think we are going to probably start to see them more and more
exclusively private contract. I mean, if anyone's trying to plan anything big, like spending big money, they're probably going to need to borrow some money, which means someone's going to assess how much of a risk they are. It probably makes sense to make sure you've got nice, crisp, clean, good finances
absolutely,
on the way in. So I'm not necessarily talking credit score, but I am. But you certainly want to make sure you've submitted everything on time, all your tax bills are up to date, and you've got clear evidence of being able to, be trusted. Sounds silly saying it, but it's true, because you're going to go to someone and say, I need to borrow probably a very large six-figure sum here. I'm trustworthy. So you're going to make sure you are.
And I think as well with the the likes of ourselves, how we specialise in healthcare, dental, things like that. We've got a lot of networking events that we go to. We network with various banks, and we have contacts at banks so we can put people in touch with, you know, the right person.
You need a good team around you, don't you?
Absolutely,
you can't just roll up at your local high street branch and say, I need 700 grand. How about that?
Yeah.
You're not going to get far doing that, are you? Yeah. Zach, we always finish the podcast with a question that I didn't forewarn you about, sorry.
Great.
It's not tricky. What's the one thing that dentists just keep getting wrong? If there's one tip to take away from this, what would it be?
Probably just forgetting the odd expense that they've had, I suppose.
You're just losing money, aren't you?
Just losing money, yeah. If you can keep a track of what you're spending, obviously on business, then, you know, just make sure that nothing slips through the net and make sure that we'll get it put in your account so you can reduce your
Because just for context, you can easily spend a couple of grand going for an overnight course, you know, 2-day course in Leeds, hotel, you know, 1,500 quid for the actual course. Like, that 2 grand is 800 quid of tax, probably for most people. Yeah. Like, why? Like, that literally pays our fee. Yeah. Like, why would you not want, like... Yeah. So, you haven't got to use us. It's 800 quid though. Yeah. And you might just go, I went on a course, but it doesn't matter. Of course it matters. Of course it does, yeah. You seem to suggest a lot of people don't think of it as a business. Yeah. Which to be honest, like, this is a business. It's a proper business. You need insurances, all your normal things. Yeah. You're on your own here. You might have a support system, but it is a business, isn't it? Yeah, I think it's definitely the sort of balance of having the business and then it being like a normal job, because I mean the day to day, you know, they go to work, they do the work 9 to 5. Yeah. So I mean, I think it's important just to remember that it is a business. Of course, it is a job as well, but just to make sure that you know that it is a business. It's your responsibility to take care of your taxes, you know, keeping records, keeping up to date with everything, things like that. You know, you don't want to end up in a rabbit hole where you've got years of tax that you need to pay because you haven't been doing it properly. We see that, and it's not fun.
It's not fun, no.
It costs more than just getting it done the first day.
The catch up of it, obviously. It's with interest rates as well at the minute.
You can almost make an analogy about why you get your regular checkup on your teeth. Yeah. If you leave it 10 years and you turn up, it's going to be painful, isn't it? So yeah, I'm sure there's a good analogy there. Yeah. Zach, that's been fantastic. Thank you very much. You can reach out to Zach. Also, Zach has written a pretty good article about the typical expenses you can claim as well. It's one of his main tips there. Yeah. Luckily, we've got an article. We'll put the link in there on that article. And also reach out to Zach if you want to bounce any questions. I'm sure he'll be happy to field them.
Yeah, absolutely.
Thank you very much, Zach. Hope you enjoyed that. Good luck with everything.